Welcome to today's trading session. Today is January 21st, 2025, Tuesday, the last day of Sensex expiry. So let's see how the market acted today. So we see there was a big downside move today, and the index closed the negative 1.6% and closed around 25,838 levels. Just to look at the charts, and let's go to the 5-minute chart. So that's how the day was. And today was very strange. We got very big moves. We got the index actually opened slightly in the positive, and people were thinking there would be a big upside because globally as well, Asian markets and even Dow Nasdaq closed the positive, +1 to +1.5% yesterday night. So there was that perception that there would be, after opening up, the index would keep going up, but that did not happen. So as you see, after opening up slightly higher, the index started losing points, and by around 10:30, about an hour after opening, so it went down all the way till 76,300 levels, which is like a loss of 1,000 points or more than 1% negative, and it stayed there for a few minutes. What happened then was really unexpected. Market is unexpected, we know that, but what happened afterwards was really unexpected. You see, there's a huge move that happened in a very quick time, within a matter of 10 minutes, 5 minutes rather, 5 to 10 minutes. The market again moved from the levels of 76,400 all the way till 77,300, 900 points move. So whatever the index lost in a matter of an hour, around a half from the morning, it almost made it within the next 5 to 10 minutes around this 11:35, 11:40, 11:45 time. So very crazy move. And then again, you see, within the next few minutes, it almost lost, it lost all of those points. And again, it came back to where it was around 11:40 time frame. It was back to 76,300 levels once again. So that we see there's a huge downside move. Then it made an upside move, and again, it made a very downside move within a short period of time. That's the reason this is not a typical market move. That's not how we see. There seems to be a lot of volatility, global events as well. And looks like there is a change in US presidentship candidature. And second term, Donald Trump has announced tariffs, or is about to announce tariffs, so that is also factored in, and the gains could not materialize. So, and later on, the index went up all the way till 76,800 levels, but again, from there it slid down all the way till 75,700 levels, and it just closed around 76,000 levels. So that was the move. Crazy day. The net negative closing of the index from the start of the day, but it was not a simple downside move. It came down, it went up the entire way up, and then it came down to the same point, and then it slid further down. So it was a very zigzag pattern, a lot of expectations on both the sides, but ultimately the index closed a lot on the negative side. So that's how the index fared. Now let's see what trades we took for the day, on the day of expiry. So today, if you see, before that, I wanted to show you how's the volatility. So you see the big spike in volatility, 5 percentage points of volatility. VIX index went up, and through the day, if you see, it's opened around 16.5 levels and went almost until 17.4, 17.5 levels. And volatility has been on the rise for the past few days. And today, because of all these big changes that happened, we really benefited by having high volatility, because of which the premiums increased. And so today what we did was we entered short strangles of 4 strikes. Let's see what we did. Let's check the orders. So you see here, we took 2 strikes. One was 78,100 on the upside. We sold one lot of a call in the morning, and at the same time we also sold one lot on the put side, which is 75,200 PE. So almost 3,000 points apart after opening, after an hour and a half or 2 hours after the market opening. And then we saw there was a big move that was happening, and we wanted to capitalize on it because VIX had shot up, premiums were high. So we sold a couple of strikes on the call and the put side, 3,000 points apart approximately. And we got a decent premium. We pocketed it, 36 on the put and 13 on the call side, a total of 49. And as the day went, you see around mid of the day, around the noon, post-noon session, 12:30 and between 12:30 and 1, there was a further spike, and you see that there's a spike happening on both the sides, where the put went up significantly, right? So we sold the first put around 36 levels, and we placed another order, and when that got filled at 46 levels on the put side, around 5,200p. And just half an hour later, even our call went up. So the first call we sold, first leg we sold at 13 levels of 13, and the second leg we could sell around 25 levels. So it was all possible because of those huge moves we saw, zigzag moves on either side, both the call and the put side. So, but still, market was not like it would go beyond the 2% level, right? So more than 2% move on either side, that didn't happen. So we looked at the market, we saw what was happening, and we took calculated risk, and we did enter in two different phases for the same reason. We didn't jump in the very morning itself and utilize all of our margin. We didn't do that. We kept something to play with, to extract out of the market as the time went by, and at the noon time that did actually happen. So this is where market will reward you if you really wait for situations to be conducive to you. That's one example what happened here. So if you look at the overall portfolio, we did a really good profit today. More than 2,000, we're in 2,000, more than 2,400 is what we're in profit. We sold a couple of calls and a couple of puts, so 4 lots is what we have sold in total for a combined premium of 2,400, and both the strikes expire out of the money. Let's look at the margin requirement. See, the total account value is 5.15 lakhs, out of which 4.9 lakhs approximately are utilized or blocked for the 4 lots that we sold, 2 on put and 2 on call side, and that's counting the very high margin requirements. 100% span is imposed on the expiry day as per the new rules imposed by SEBI. So that's where we can approximately take total margin requirement to be around 5 lakhs, and we made 2,400, or a net gain. If you see, we have made a return of investment of around 0.5% on this expiry day, which is really good, taking into consideration this is not the way that usually happens. Recently, volatility had dried up until the last week as well, and we were not getting that good of a premium. So if you are patient, then those few days or one day, once in a while, they can really get you good returns. So you don't have to chase returns and try to commit mistakes chasing something that is not happening. Take a lot of risk, more risk than what you should be. Don't do that. You just wait, have your cash ready, watch out for the signals, the right signals. You enter at the right point, but again with a proper risk defined. So in this case, we didn't say that the index break out either side and breach the 2% mark on either side from our previous close, right? Like plus 2% from previous close or minus 2% from its previous close. That didn't happen. So we kept a close tab on the index and ensure that the spot was much further away from our selected strike prices. And so that's how we end the trade today. Let's see what the rest of the week has in store for us. Of course, there are good opportunities coming up, but at the same time, we need to be very careful with the selection of our trades, which should be going according to the market conditions. So overnight, we'll keep a view on how Nasdaq performs and see what kind of announcements come from the US and what it means to the Indian markets as a whole. That's all for today. Thanks for watching.